Okay. So how are you guys feeling? Did you like the conference so far? Woo. Is there anyone alive? Give us some noise, please. Very exciting. I'm very excited to be here and be the moderator of this panel. So my name is Domantas. I'm co-founder and CEO at TransferGo. But over the last couple of days, I was the moderator and host of this great event. And we have 50 minutes for this discussion. I'd like to kick off by introducing our great panelists here. We have investors from across the globe here. So I would like to start with what I have written here. So we have Christian Thaler. So Christian Thaler is here, and he's from Wellington Partners. We have Marcin Heika here, so he's from Intel Capital. We have Donatas Karas, our and my investor, Practica Capital, very nice. We have Blumberg Capital, Ilan Lifshitz here. We have, of course, Ilya Lars, Nextury Ventures. We also have Wlodek from Nomad, that's Polish venture capital fund. And we have a representative from Pitango, that's Rami here. Pitango, that's Israeli fund. So the topic of this discussion, and let me break it down. So we have 50 minutes right now, and out of those 48 minutes, we're going to start with a quick Q&A. So I'm going to ask gentlemen a few questions to get their views, so that everyone will find what do you think about stuff. Then we'll move into a sort of deeper discussion, and I would ideally like to leave 10 minutes for questions from you guys, because this is all about you. I wanted to make this as interesting for you and relevant, so you could take something out of it. Hopefully we'll make that happen. At the end, I'll ask you if that was relevant, and I'll be open for your feedback. So the topic of this panel discussion is startup trends according to investors. And I would like to start asking, what's hot is also its market and investors. So, big valuations drive big money into the companies. And I'd like to first of all ask first question to every single one of you to name 2 industries and 2 markets. So which areas are going to be hot in the next 1 or 2 years in your opinion? And I'd like to start with Donatas and go all the way here. So whatever you think it's going to be hot in the next couple of years.
Okay, thank you for the question. Hello, everyone. So it's easy, right? 3D printing, of course, and fintech, 2 things. And we vote with money for that, yeah.
Okay, yeah, well, I would definitely agree that 3D printing is cool. I would add mind reading at the pretty high on the top of the list, because I think there is a lot of cool opportunities there. I still believe that in mobile application, mobile phone space, there are still to be a lot of things to be discovered. And I still believe that in the internet space, new shapes and forms of social networks are still going to be pretty big. So those.
Software as a service, this is still a huge opportunity in many niches. And you should go after the big cows, the old mainframe things which are slowly going out of service. And software as a service is a natural play to go in there.
High-level financial services as a consumer play, and cybersecurity on its different verticals.
I would say that big data and the convergence of big data with other technologies, like big data with communication, big data with advertising technology, big data with even life science and medical technology.
So someone mentioned software as a service before. I want to break it down into one part that I'm particularly interested in, and that's cloud-based developer tools. Anything that automates software development or increases efficiency by factors of 10x or even more, and I think that's a very huge space.
So in my opinion, the 3 hottest segments at this point of time would be Internet of Things. Basically, various intelligent sensors that will become part of every device, and ultimately there will be more things connected to the internet and producing data than people on Earth, and this will be a multiplier of 10 or more. big data will be a consequence of that. So basically, every device will be producing a lot of data that will require some sort of analysis, and it will drive huge demand in big data. And finally, somehow unrelated or maybe related area would be wearables. That is also incredibly hot and will develop incredibly fast.
Okay, so maybe a couple of things. So things that were sort of similarities. We had fintech there, of course. We had software as a service. We had big data. And this seems to be the interest of our investors so far. And this is what we see the valuations coming up. I would like to then talk about why do you think these markets are specifically interested? Because I think that there are underlying characteristics that sort of make them similar to one another. So if you could sort of briefly talk about what are the key characteristics of a market that's especially interesting for a VC, and why some markets are more interesting than others. So anyone?
Yeah, I can start. So I would say that VCs go after growth and money. So generally the segment needs to be offering significant growth potential. And number two, it has to be something that is solving a problem of either a consumer or a business to the extent that either a consumer or a business is willing to pay for it. Once we have those two elements for it, which is growth and revenue opportunity, VCs will go after this.
So I will maybe continue and recap on that. What we are looking for is usually companies that can be global companies and companies that can be category leaders in their space. So we are aiming for building big companies. It's not always happening. Sometimes the companies are being acquired before, but we would like to build a big company. So to do that, you need a big market, you need a very good solution, some unique IP, because we would like to see some unfair advantage of our company. You need a great team. So it's quite basic, but I think this is really the main things for building a big company.
Ilya? Yeah?
I have one word of advice. When you consider which market to target with your product or your service, I would suggest that you consider B2B channel as preferred one to B2C. From the point of view of VC, B2C is much more difficult, and breaking in that market requires it's much harder work. So if you can identify a very good B2B play, just go with it. Also, when you want to prove that your product is good and you actually show that you have paying business customers, this is a great play. This is a great story to tell us, because we know that if a business pays, then that must be good. Yeah. Sometimes customers pay and they pay, but then they go and they don't pay anymore. But please consider business as number one opportunity play for your services. Thank you.
What I thought would be interesting to understand is the VC mentality. If you look at the high level at the all investment instruments available, like apparently they range from high secure and low reward to high risk, high reward. And probably venture capital is on the furthest possible end, where you really risk losing all your money, there is no really security to that money. So in exchange, just to compensate with an extremely high risk, because basically you're giving money away to free kids who are going to spend a couple of million, and you don't have anything to come back if it fails. So the risk is extremely high. So in exchange, you need to be able to get extremely high reward. And it automatically happens that currently in the industry, high rewards are only possible almost entirely in the high technology space, where the markets are created huge. So I will, for example, mention that this mobile application market that just emerged in the last few years, right now is estimated to generate $50 billion in a year. and that's like more than the whole music industry with everything. So when these new, like fundamentally new markets are created, and this is exactly the space where VCs tend to operate, because they look at this space and say, hey, the new technology is coming, like 3D printing, or mind reading, or sharing economy, and probably those technologies are likely to create a massive fundamental tectonic change in the whole industry. Like just imagine what kind of markets could be created if you could just print like half of your house appliances at home as opposed to just going to the supermarket and buying them. So the first step for a VC to is identify which specific technologies and verticals are likely to create not just like small changes, but fundamentally new markets. And then look in that space, because that will be a space where the huge rewards are possible for those who are making the right bets, and that in turn compensates for a high risk, so that almost like kind of binds a VC to invest in their specific areas. And this is the reason why funding a next restaurant not necessarily is a good fund for venture capital, because this is falls apart from that kind of mentality.
Okay, I think that here there was one interesting concept that I heard, that people are looking for growth and money. And recently, a lot of us read TechCrunch, a lot of us read various pop tech blogs that I would like to think about them, that paint a certain picture of the world, paint the picture of an investor who is only going for the hockey stick that can acquire users, and the commercial model is maybe not that important. And I would like to ask Elon your opinion about if there was would you invest in a company that has huge growth in users but has a weak commercial model, by thinking that you will always find a commercial model when you have a lot of users? Is that still the case? Has that been proven by Facebook or other IPOs, in your opinion? And yours?
So, first of all, as an investor, I have very simple requirements. I want a killer team, disruptive technology, and huge problem to be solved. Would I invest in a company in very high growth and no business model? Personally, no. I wouldn't do it. Times have changed. I would invest in a company that is growing rapidly, growing very fast, and doesn't have yet a clear business model, but has some general ideas which we will implement down the road. But it will be very important to me that the guys or that the team I'm working with knows and understand that at some point they have to generate some kind of revenue. Saying that, I do believe that investing in very deep technology, investing in a company that has amazing technology, they can become very big even before they generate $1 of revenues, and they can even exit, as I have seen personally lately, in a pre-revenue situation. But they need to be aware that there are business models that need to be implemented, and the time has changed. It's very hard to see now significant exits without a business model in place and some kind of revenues.
So let me pick up on that. I was for a very long time a believer in that there had to be revenue from like almost day one. And but then marketplaces came up, B2B marketplaces, peer-to-peer marketplaces, where you wanted to grow to a certain user size before you could turn on any kind of revenue mechanisms. And so I've seen that happen, and I guess I kind of changed my mind there. So I would accept that for a certain time, companies could grow without any kind of revenue model, where you had the fantasy to see what the revenue could be one day, even though maybe it's really difficult at some point. So look at the car sharing websites, right? And when some of them in Europe started turning on the monetization levers, it was difficult. They lost some customers here and there, and people were uneasy about it because it was the community of people that use the product, or use the marketplace, and now all of a sudden there's this commercialization. Same thing in the enterprise software space. Lots of open source software, lots of people who put a lot of dedication into the product, a lot of curation, community management, etc. And then all of a sudden there is this corporate that turns out in the same space, the same maybe people who initiated the product or something, that all of a sudden are offering a commercial product around an open source product, and that also it requires a lot of skill to change and fine-tune the message there, make sure you're not alienating customers, etc. But the point is, I was recently looked at a software product that had like 100,000 downloads of the free or open source product by very large, legitimate users. So maybe a software developer inside Goldman Sachs or other large companies that all indicated if there was a commercial version of the product available, they'd be willing to pay for it. So that's an indication, obviously, where you already have an installed base. All you need to do is create a commercial or an enterprise version of the product, turn on the monetization, and then you can start converting customers.
Anyone wants to add?
Yeah. I would say that the question whether we would invest in a company with good traction but without a business model, so there is no one answer. From a philosophical point of view, probably the answer is no. From a strategy point of view, the answer is probably also no. But in venture capital, we need to be opportunistic. So from opportunistic point of view, it depends what is really the growth, the metrics, and if you think that you can convert it to a real business model, and whether the team, the founders, really understand what it takes to convert it.
Okay.
Yeah, I would say that I would start from the definition of innovations. And I would say that these days, innovations is not necessarily just creating new technology, developing new IP, new patents, new material, or writing new software. I would say that significant percentage of innovations that are happening these days are business model innovations. And we need to be aware of that. And basically companies may invent some completely new business models that may make the company incredibly successful financially, even though the company is not selling much or even not selling anything. And for example, back in 2005, we invested in a Czech business called AVG that was the inventor of the freemium model. That was the company that basically didn't have any PR, they didn't have any marketing, they didn't have any sales team, they didn't have any business development team. They had a good security software product, and they decided to give it away for free, without any hooks, without any strings. So basically everyone could download the product, fully functional, without any limitations, and use it for free. And in the beginning, when they did it, there was no guarantee. It was clear innovations. Before that, the most thing you could get was a 3-month trial. And suddenly someone came out offering very high quality product for free. In the beginning, there was no guarantee they would ever be able to make any revenue out of free users, but eventually they did. And the company went public on New York Stock Exchange at north of $1 billion valuation. So this was the kind of innovation that worked. But even if you take a look at some of the recent exits, and this is what probably any investor would look at. Take a look at WhatsApp. WhatsApp is a free product for the first year, and then they charge users $1 per year. This model sounds terrible, but this company was able to grow to 400 million users, which means that if they charge every user $1, it translates into 400 million revenue. And in my opinion, this is another example of brilliant innovations in the business model area.
Okay, I would like to talk about this a bit because I have messaging and WhatsApp a lot here. 19 billion valuation, and they're growing by 1 million per day. That's the official data. According to Business Insider, even if they grew that rate and they would have 2 billion users, still they would like, in 5 years, they would only be doing 2 billion in revenue. So 19 billion valuation and 2 billion in projected revenues in 5 years. How does this math stack up in terms of investors? Can you guys just give your opinion, or sort of maybe you have some insights into this?
I feel the deal is amazing. It's crazy and amazing, and I think it needs to be looked at not in the pure number valuation and what was paid. If you have a company that can pay, Facebook, that wants to take out the #1 competitor, they just did it. I mean, a few days before, there was an Israeli company called Viber, sold for $900 million. Also a crazy number for someone that knows the inside and the company and the numbers. Everybody was so amazed, but then it suddenly became a sour deal because compared to WhatsApp, and Viber has a bit less than half of the users, but suddenly, you know, from 900 million, now 19 billion, you can't realistically look at the WhatsApp deal and try and analyze it based on logic. There's no logic there. It's based on a crazy company that's crazy successful, wanting to take out the #1 competitor, that's taking away from them a very important target market, target crowd, which are the young people. That's how I look at it.
So crazy companies win crazy revenues, right?
Yeah, and just to add on that, absolutely right what Alan said, but just to add on that, $19 billion to Facebook it's not nothing, but it's not much. It's Facebook dollars. It's kind of like, when you have a balance sheet like that, to take a couple billion out of that and then pay the rest with Facebook shares, it doesn't have a meaning. So to other companies, it would be huge effort to, put such a transaction up. To them, it doesn't mean anything. So again, it's an outlier. I wouldn't even look at it in terms of, comparing statistics or something and how is venture or whatever performing. It doesn't mean anything. So it's great. It's a great example from a product point of view, much rather than from, the acquisition standpoint, to have someone be so focused on the product that they don't care about, advertising or something. Just they wanted to build a great product that's extremely transactional, that's extremely high performance. What is it, 36 people or something supported 500 million users or 400 at the time of the acquisition. So it's just, ratios you've never heard of before in the industry. And I think this is something that you, as an entrepreneur, I would look at.
Yeah, I would ask a couple of questions. Like, for example, will users stop using WhatsApp if the price goes up to $2? Will they stop using it if the price goes up to $3 per annum? I would say that probably absolute majority will keep using it. In addition, I would say that there is potential and extra revenue is also unlimited. So generally, what you see in multiple industries is that once the company is able to build sizable user base, the easiest user base to monetize is the user base you already have. So it's quite natural that, once you have the user base, to think about some extra services, some extra functionalities that can be offered and charged for. So I would say that revenue potential of WhatsApp is way, way above the $2 billion that we started this discussion with.
Okay, I'd like to maybe twist it from another point of view, looking at WhatsApp, because back in the olden days when I was way younger than I am now, it used to be cool to build lasting companies. We built Apple, you build IBM, companies that will last. Now the end goal is actually sell it and do another thing. And looking at in the future, do you think that this trend is going to come back, that it's going to become fashionable again to build companies that will acquire other companies? And is there ever going to be a time when you go to an investor and say, I am going to build the next Google, and they're actually going to do it, and then they're going to be buying everyone else, rather than saying, I'm going to sell myself to Google? Maybe I'll ask from that point of view, yeah?
Yeah, so, well, I think that the Facebook example has shown that those times have never ended, right? So it really, well, it is true that right now entrepreneurs have been taught that it is pretty easy to build a company to sell it. So if I'm not wrong, the statistics currently are like for every one IPO, you have like 50 companies that get sold in case of success. But it doesn't mean that there are not enough companies or there are no spaces where you can build a company where you can successfully do IPO and grow big. And once you do IPO, apparently you can print your own currency because you start being able to print your own money. And then just like Facebook, you can not necessarily have to choose. But a ratio those independent companies versus acquired company, I think has shifted towards the acquired companies for a very simple reason. Like the whole entrepreneurship space has grown. Like if before 10 companies would be created like a year in a country like Lithuania, right now it's much easier. So I think that it is much easier. Apparently the liquidity and the turnover of companies that are easy to build, like you can sell a company with 3 guys, with 10 guys, with 50 guys. Apparently you don't have to be like $100 million revenue to be able to do IPO. So I think that that has attracted a lot of entrepreneurs. So apparently a lot of new companies have been built, small ones that are designed to be acquired, and the supply of companies that are capable of being independent, of generating the Facebook-like revenue, has always been at constant. So as a ratio, we see it less, but it totally doesn't mean that there are no new independent companies. The other thing, I think, and this is very specifically, venture capital has played a great role. Before, a company wouldn't have a chance if it wasn't sustainable itself. So you have to be a business to be able to survive in general. Right now, you could be a technology, you could be a user base, you could be a know-how, and you still get a chance to earn from that even without earning a dollar. So I think that really has enhanced the opportunity for entrepreneurs because, again, thanks to the guys like the venture capital sitting here, who can fund a technology, a know-how, something that doesn't necessarily earn money itself, but when applied to a company like Microsoft or IBM and Nokia can turn into big revenue, that has really enhanced our opportunity to really focus on what you really want to do, as opposed to necessarily building something that only generates revenue and nothing else. So I think that also added to the range of companies that are not sustainable themselves, so they are designed to be solved. But this is good because they can focus on one specific field, one specific technology, and if investors believe that that technology, again, be it mind reading or artificial smelling or something like that, could be successfully applied and sold, that company will have money to invest and to focus on something that they do best.
So I think that companies are not being sold, they are being bought. And you cannot plan your strategy on Google or Facebook acquiring you. You have to build a real company. Many times they will acquire you or somebody else will acquire you. Also, I don't like to have only 2 potential acquirers, even if they are big ones. Although some examples that were mentioned, Waze from Israel or WhatsApp, eventually only 2 or 3 companies could have bought them, and it was a very big check. But we prefer to build a company to grow. We like very much to address the public markets. Last month we took 2 companies public on NASDAQ. I hope we'll take more companies. Depends, of course, how the markets are going to trade. But even if not taking them public, building them to be self-sustained with high growth, which is very important, and then the buyers will show up.
Yeah, Martin?
And I would say that a lot of companies is still being built with a long-term horizon. So of course, I think that media are dominated with some, news about, some companies being acquired like Instagram or WhatsApp. But at the same time, a number of acquisition offers have been turned down in the last couple of years. Yeah, like Snapchat or Groupon turned down acquisition offers. They decided to grow business and stay independent. And I would say that one important number is the number of IPOs. And last year was the 2nd best year ever in terms of number of technology companies going public. It was almost 250. And which shows that actually, very good number, very large number of companies is being built with an idea to build long-term independent businesses.
That's very interesting. I would like to turn the discussion about the future more to the Baltics, because I think that last year and year before was explosion in seed investments that we had. Many companies got seeded, and with obvious view that a lot of them would raise Series A. And I would like to ask you all about, what's your opinion? Is there a Series A crunch right now in Europe? Because I'm raising Series A for my company as well. So as personally, I would be very interested to hear that. And I guess that we have at least 12 companies from Practica Capital portfolio alone who are trying to raise Series A in one way or another. So maybe we can start with Donatas. And what's your view on your portfolio's success so far?
Yes, of course. Not 12 companies, I would say we have 4 companies actively raising Series A round now, and we had one success with Intel Capital. We're happy about that. We have another 3 in the process. We have, out of these 3, 1 in a due diligence process, and another 2 just kind of preparing and making initial talks. Of course, it's not so easy, and I wouldn't say that it's a crunch or a problem, because we get more attention to Lithuania every year by year now, and I wouldn't see it as a problem for Lithuanian companies. It's hard for me to speak about the Europe landscape in general, so maybe somebody can comment.
Let's ask our guests from Israel or Europe. So, yeah.
Well, I don't see any round A crunch in Israel. On the contrary, every company which is decent and good will go out and raise, and the numbers just went higher. The round A rounds that I'm involved in, companies are raising $8, $9, $10, $11 million, and they have all kinds of term sheets chasing them. I think it just comes down at the end of the day to the quality of the company. And also, if I look at our US-based portfolio, the story is the same. They struggle if they're not good enough, or if the potential is not fully proven. So then they take a convertible loan to reach the round A in a better situation. But from where I stand in Israel and the US, I don't see any round A crunch so far.
Christian?
Yeah, if I was an entrepreneur, I wouldn't. Okay, so technically I would probably worry about my financing situation, but again, focus on the product. And if you're doing a good job there, the money will come. Every subsequent round is harder than the round before, I think. So right now we have a situation where all across Europe, in fact probably all across the world, it is fairly easy compared to 5 years ago to raise the first round of capital, like a seed round. And that's why the requirements of the Series A round have kind of been moved upwards. It's just a trend that comes from the availability and efficiency and ease of use of technology, etc. So a lot of things make what was formerly the Series A is now the Series B, and was formerly the Series A, or the seed round is kind of now moved on to the Series A. There are a lot of companies that raise like 2 or 3 seed rounds, even like a late stage seed round. I've seen seed rounds worth $1.5 million at a valuation of $10 million. So it's not so much about the labels. Focus on what do you want to do with the money, and when do you need to raise the next money, and is there a chance, is there a reasonable assumption that you can actually achieve those objectives, and that maybe you don't even need to raise money at that point because you're break even and you don't stand with your back to the wall. I think that's the most important message to the entrepreneurs.
Yeah.
So I think that there is always a crunch somewhere. So it's like a traffic jam. If you are okay in the first traffic light, the jam will be in the second one. So I don't think that currently there is a crunch in seed or Series A, but it will, and depends where. It could be in Series B, and if the public markets will dry up, then you will have a crunch in the later stages, in the growth, because companies will not be able to go public, and they will need to raise substantial amount of money, and then there will be a lot of pressure at the later stage. So it's a moving target. There is always a problem.
Anyone? Yeah.
It's maybe quite important to mention the trends of funding. And the trends are that there are smaller and smaller rounds required for companies. So in fact, it's good for you, it's bad for us. We have to work much harder to spend our money, and you require less and less to get where you want to get. It's always a difficult decision to pinpoint exactly how much money you need. It's of course a question of equity as well. It's a question of a lot of things. But generally, the trends show that the companies are able to do much more with much less.
Anyone else? Okay, so we have how much time left? We have around 40 minutes. So I would like to maybe ask you a few questions about companies who are now, or future companies who are sitting right here, and they're thinking about ideas. From your experience, because you've invested in many companies, and you've seen the thought process, the successful investors, sort of, how do they come up to these ideas that then build them a fortune and fortune for yourself? So what is the number one, let's call it a trait that you find in your founders of your companies that would make them successful, and the number one trait that you are looking for when you're investing in people? Because I think that's a lot of things of what you do is actually pick the right people. So you could just elaborate more on your definition of a successful entrepreneur and how do they find these problems to solve in the market. It's more of an open question for everyone.
It's a very good question, of course, and when I look at the young entrepreneur, first couple of things what I look at, try to find is dedication, persistence, and ability to change and being flexible. Meaning that I hope that the person which we will invest in will be able to adapt, learn, and will do it day by day by day and day. Because idea changed. Domantas, you remember when you first came, you had different ideas. Crazy ideas now, but keep knocking on the doors, right? Keep knocking on the doors, changing it, doing it persistently, and you proved yourself. So this is probably the most important thing for me. Just the person being able to learn and want to do that. Dedication for that.
Well, I would tell two things. One is apparently it has to be a big idea. As I mentioned, venture capital is looking for high risk, high reward models. So if you come up with an idea of, next mirror for your iPhone, with all respect, that doesn't qualify for NASDAQ, so you would never, as a VC, have any kind of meaningful return on that money. So even if it might be a brilliant app or idea or something, but this is not subject to venture capital, so to start with, it has to be an idea that potentially changes the world. So that's the number one by far, by must. Especially, again, you have to realize that venture capital not only give their money, but what's more important, they give their time. Right, and we're busy. We want to spend time only with something that potentially turns into something huge. It's not fun working on the next mirror idea for the iPhone, although it might look different for a kid from university. And second is, again, I personally wasn't able to identify any specific personality traits. I've talked to maybe 100 or so successful entrepreneurs, and I didn't really find anything. I saw geeks as much as I saw serious people. I saw fun people as much as I saw other people. So to me personally, maybe I'm wrong. That's maybe only my experience. I've seen success coming from people you wouldn't even think might be aggressive or knowledgeable or something. So I kind of stopped measuring people and said, hey, if somebody comes with a good idea, like really, really big idea, it doesn't have to be unique, by the way. I always said, idea like an elephant, you cannot hide a big idea in your pocket because, very likely if you're running alone in some direction, it's a very strong indication you're running somewhere in the wrong place. So typically, it's okay to have an idea that somebody else is trying to implement. Apparently, you look, there is no still a winner in this space. There is no somebody far ahead of you in this space. But if 10 guys are running on something big, I have absolutely no problem investing in the guy who is like 11 in the space. And apparently, you have to show that at least you have a basic qualification. If somebody comes to me and says, hey, I invented the next quantum physics, like whatever, but I don't have any education in physics, well, that's, you are able to put 2 + 2 and say, hey, this is undoable. And this is where very often you see guys coming to you and says, hey, I have thought of like the next generation, like statistical financial model that will change like everything in your life. But sorry, I don't have even financial education in my background. So big idea, and at least ability to prove that you have a basic qualification to fulfill or deliver what you're promising, and that's probably about it.
And when you talk about big ideas, for me it's a very important distinction. Like there's some ideas that solve a pain, and one that increase pleasure, so increase the utility. So which one would you advise to go if you were a first-time entrepreneur? Something that really solves a pain for a lot of people, or something that basically builds a lot of utility? What's your view on that?
Well, again, I wouldn't probably put in those only 2 buckets. Again, the criteria that I would look, again, because you're risking so much. Apparently as an entrepreneur, you're risking even more than we VCs do, because, at the very worst, we lose the money, but, we have a portfolio to distribute the risk, so something wins anyway. But as an entrepreneur, at the worst case, you lose like 5 years of your life. And I have seen, guys who have worked hard for 10 years and achieved nothing. So as an entrepreneur, apparently you put a ton of risk on choosing that path. It's like for every Hollywood Tom Cruise, you have 10,000 to-be artists that spend years in those like little wagons, and they are going nowhere. So as an entrepreneur, you do accept a ton of risk, and apparently it only makes statistical, financial, mathematical sense to exchange that risk for something like super big. So if you spend 10 years, and at the best you get, half of what you would have earned as salary, well, that's a questionable, life decision, unless you enjoy what you're doing. But that's a whole different story.
Sure.
So again, if I was to be an entrepreneur first time, apparently I would look, something big anyway, because the ironic thing is, it takes approximately the same amount of effort to build something small as to build something big. But the reward is fundamentally different. And B, what I would definitely be looking for, and this is what I have done in my past life, is I would look at the areas like completely new. Like for example, like 5 years ago, starting mobile app business, I decided I was not able to compete with PC gaming business or internet business because you already had companies that had 20 years of experience. So if you join that space, it's the same as trying to compete with banks. Sorry, they have like 200 years of experience. So I would choose something fundamentally new, and at least I would know that nobody has experience in that space.
All right. Brief opinion of others in the panel on this question?
Yeah, I'd love to comment on that. So, again, I totally agree. There's no straightforward answer. I've seen many smart people that totally switched careers in the sense of they did something else before and then turned out to be great entrepreneurs in an entirely different field. All happens. But when I look, I did the exercise actually once, and I looked at the CVs or what we had available from all of our portfolio CEOs. And what I saw was a pattern, and the pattern was something like that. If you're really young, you can do pretty much what you want, there's a random chance that it will actually turn into something, like something significant and large. There is typically these people also end up in consumer side businesses. If you are a couple years older in terms of work experience and you maybe have 5 to 10 years of work experience, typically startup founders tend to stay in the domain that they know about and that where they have thought about a problem for a couple of years already. It's something that I mentioned in my presentation earlier. So what I really find very intriguing and convincing are people that have these 5 to 10 years work experience, could be consulting in a certain field, could be a product or business process that they own in some company, and they're pondering that issue on someone else's tab, and then they decide to go out and fix it and build a company on that. And this is, I mean, a lot of the companies that raise funding in the last couple of months or years in Central Eastern Europe have done that. So if you look at the Futurelytics guys in Czech, they did 10 years of BI consulting. If you look at the Stropel guys in Bulgaria, they worked in the IBM or VMware Development Center, and now they're reinventing the SAN stack from ground up. So these are things that typically, that's not something that you do when you come out of university straight, or that's not something you do when you switch careers. It's something you do, it's a continuation of your career, just not on as an employee, but as an entrepreneur. And I think that's very promising.
I just want to add that, in a startup, you could have different kind of founders. Some are founders that are more techie, so they are the CTOs. They invent whatever product the company is developing, and that's why usually these guys have really more deep understanding. And some founders, those who are also later becomes the CEOs of the company, are more business leaders. So here you need more leadership, out of the box thinking, creativity, and it's good for different industries. If you are a leader, you are a leader. If you are a businessman, you are a businessman. But what I really believe is in creating a winning team. Not everyone is the same in the team. You need one leader, and the team can really play together.
Yeah. Very soon I'd like to come to approach the questions from the audiences. If you just have very quick follow-ups on this. No? Anyone? Okay, so we have like 4 minutes right now, and over this conference our audience has been quite shy, and I wish they weren't now, because it's a great opportunity to ask something that we missed, something that we'd like to ask. So is there any questions in the audiences? We have microphones here, and we will run up to you and you'll have an opportunity to ask your question. Any questions? Lithuanians are not shy. Let's not make this like we are shy people. I remember last conference people were running after Steve Wozniak, so it wasn't shy at all. Guys, come on. Any questions? Oh, we have one question there. Good. First question. That's always a good start.
Hello. I want to ask, which way is the best to present the idea for the investor in the first time? I mean, to send a presentation, to talk, and the best way how to present ourselves.
Come to a conference like this and meet us over there for a 25-minute pitch. Unfortunately, that's over now. We have 2 days of time.
Next year. Any other tips? Because I think that the general question is how to approach when you don't have the network, you don't know people, how to just approach and have the opportunity to express yourself and meet. For example, you met us 3-4 years ago, and we didn't know each other before. So that was a huge thing for us, but we just cold email you. A lot of people don't know how to do that or no.
Right, so the best possible advice, I think, is to be extremely short. Like, I receive a ton of emails, 10 pages each, and a lot of entrepreneurs think that the more text and thinking and formulas, etc., calculations, business plan, money flow we put, the more chances we have. Totally the opposite. It's simply not enough time to read all this stuff. So if you put like 5 words, like I am doing this and this, you have way more chances of get initial attention than you put like 10 pages of tough text, because nobody reads that. And if you're smart enough, you can put a lot in 5 sentences, and you just like blast an email. So if somebody is really interesting, then they would follow up and would say, okay, that sounds interesting, can you please clarify or give a little bit more details, etc. But being concise and very short, I think that's the best possible advice.
I just would like to ask to add CV. That's it.
So yeah, CV and people, very important. Should they call, email you, or try to find a person that you know, for example? That's also maybe part of it.
I mean, the best way, again, you're talking about someone without a network, but the best way to approach a VC, the first things we read, because we get approached by hundreds, if not thousands of entrepreneurs every year worldwide, is to be introduced by someone who knows us. If you can't do that, then as mentioned here, find us in events like that and be short and be clear and explain well what you do. And, hopefully it will raise our interest.
I may add, do your research and don't do mass mailings. It really shows when you send the same email to hundreds of VCs, and it's actually
copying
received
all of them.
really badly. Do the research on the VCs. I mean, we are all different guys. We invest in different companies. Look at our portfolio companies and figure out how to make it interesting for us. Say that I saw that you've done this and this, you may be interested in my startup. I mean, really put a little bit of effort. You want to win us over. Show that you put a bit of effort trying to understand who we are and trying to make that email personal and relevant.
We are out of time, but I want to ask get one last question from the audience, if we have some time to do that. I think we have 5 minutes. Yes, there is one question there. Vytautas is going to ask a question. Very good. Our volunteers are very speedy, so it should be.
Hi, I am Vitas. So actually, I want to say, Domantas, you're doing a really good job leading this panel, so it's really hard to ask questions. But my question was, since this part of the event is sponsored by the government, Enterprise Lithuania, what do you think is the role of government in the whole startup ecosystem? Just some quick thoughts on that.
Government should not compete with private investors, but at the same time, government should encourage more entrepreneurship and more private investment and more venture investment into startups. And I would say that the idea of creating government-sponsored funds is only as good as it's managed by private people who are selected based on commercial reasons. And actually, probably one idea that works generally very well, and it worked well in multiple countries, is the idea of fund of funds, basically matching private funding that is raised by fund managers.
Yeah, I want to add that government can do something good in this case and really sponsor funds, have all kind of programs that can incentivize investors to take the risk and invest in a certain country, for instance, like Lithuania, now, not to postpone the decision, because the best or the easiest thing for an investor is to sit on the fence and look at it for a year or 2 or 3. So government can give incentives, but do not really interfere with the management of the companies or the funds. So different governments did some great things, including the Israeli government that had some very successful programs where they gave incentives, they selected professional managers to run it, and they did not interfere.
I think the general consensus is that, Enterprise Lithuania is doing the right things right now. We should do more events, and facilitate what's happening here. And I think we've come to an end of this panel discussion. To wrap up, I'm very excited to see great investors coming to Lithuania year after year. But I think that even more excited to see that our ecosystem is evolving, and we have Practica Capital, Nextury Ventures, who are going to be investing in seed level, which was missing ground. So thank you very much to all of our investors, but most of them won't run away, because we are going to come back and do the most important thing, which is going to be the pitch competition. A lot of you guys are probably going to be on the jury, picking up the best startups. You're going to get the prize money and the best startup, which is going to go on the roadshow this year, which my company and a bunch of others here went, and it was spectacular. So thank you very much for your time here, and let's come back very soon.